I will invite Florin Teleabă, principal at Kearney, to show us the results of a very interesting study. I would say that it's a TV study. We asked like 100 Romanians, so thank you for joining us.
Don't spoil the fun. Hi everyone. First of all, can we start from like the main page, not in the middle of it? Yeah, that's better. Hi everyone. So my name is Florin Teleabă. I'm a principal in Kearney. Kearney is a management consulting firm, global consulting firm, 60 offices, 40 markets, for those who don't know. Razvan kindly asked me to come today to speak about SME lending and bottlenecks in lending, and I thought to prepare a couple of, first of all, slides, because as a consultant you have to have slides, and sometimes they're boring, but their important information is there. And then, yes, we did a small survey, am întrebat 100 de români, I thought that initially to also put Cabral's or Steve Harvey's picture on the slides, I was told not to. How can I move the slides? Okay. Good. So let's start with anchoring the discussion in a percentage. This is the gap in financing the micros and SMEs in our region. Romania has one of the highest gaps. Gaps meaning the gap from between potential demand for finance and the actual offer that financial institutions, banks or non-banks actually offer to the SMEs. So 70%. It's not that bad actually compared to the rest of the region, because others are also experiencing a quite high gap. Why does that happen? I think the reasons why does that happen, they're familiar to everyone. First of all, it's a risky sector, so banks are obviously scrutinizing every application and the history of the firm and the collateral requirements and the collateral available and so on. It's also the habit of entrepreneurs borrowing rather from friends and family, or the third F, which is fools, but we'll come to that in a second. Or the biggest form of SME lending in the market, which is supplier credit. And that being said, it means that in the market currently you have about 500,000 active SMEs, of which just about 1 in 8, 13%, get financed through banks or non-banks or non-banking financial institutions. And the vast majority don't even apply. Some of them may not need financing, but some of them don't apply because they know they will not get the finance from the financial institutions. So then, yes, we asked 100 Romanians. We actually did a small survey. Very open questions, by the way, not those multiple choices where you prime the respondents to answer in a certain way. We just asked to 100 small entrepreneurs a couple of questions. And the first one was, what were you most unhappy with when applying for a loan to a bank? And like the game, like the TV show, who wants to go first and have a guess, which is, any idea? Why are they unhappy? Please. In? Documentation, yes. A lot of documents. Something else? Turnaround time, yes. I didn't hear, but I think it's yes. I think all the, I think all the reasons are going to be right. And we have actually more than 100 people here, so it goes like this. First, long waiting time for the decision. Time is of essence. Bureaucracy, bureaucratic process. And yes, too many documents requested. And also costs. Interest rate is too high. But then again, with price, you know, the psychology of prices, you ask customers, do you want a lower price? Obviously, yes. Yeah. Do you think price is high? Obviously, yes. So leave price aside, so interest rate aside. It's about time, it's about lengthy process, too many documents. Now, notice something interesting. The shares there, the numbers, are the share of people who actually said something about that. They're very low, and that means behind, and I'm telling you behind, it's actually a plethora of reasons, a lot of things with which SMEs are unhappy. And these are just the first or the most frequently answered. So we asked them, would you take a loan from a financial institution if it's done in minutes, if you can take it in minutes, or would you rather go steal for a loan from family or friends or fools? And 60% said, yes, I would take a loan. If it goes fast, I would take a loan from the banks or from the non-banking financial institutions. And so we said, why? So we asked, why? Well, obviously, the first answer was not time, it was trust. They trust more the financial institutions. But many SMEs answered that. Then it was about the time. So, of course, immediacy, at least in knowing the decision. Professionalism of the banks, ease and accessibility. There's other reasons also, like which probably as a financial institution you don't want to hear that much. Like if I get stuck with paying back, I want to not pay back on time, the bank, not my friend. And then you have to manage credit risk. But I think one of the key ideas here is financial institutions and banks still, people still have a high trust in them, and you should take leverage of that trust. We also asked them, would you take a loan quickly online from your sofa in the evening, or still go to the branch, but for a smaller cost, so for a smaller interest rate? And again, there's a bit more than half who would trade cost for the convenience of getting the loan fast. And then we asked, why would you choose to apply for a loan from your sofa as an SME and not go to the branch for a better cost? And these things is very important again. So not losing valuable time, ease and simplicity, immediate certainty, limited documentation request. I promise this is the last question, and then we switch to other slides. We also asked them, what do you expect the bank should offer you? So again, open question. They were able to answer everything they wanted. And some wrote like paragraphs. So we asked them, what is it that you want the bank to offer to you, to really help you? And obviously, many, 80% said, well, yes, banking offer. I want a good loan. I want a fast loan. I want good product services, banking services. But equally alike, majority of them, they mentioned also product services which are not bank related, so beyond banking. Things about helping them grow their business, manage their business, protect their business. There were actually quite few who mentioned insurance products or ways to manage risk and uncertainty in their business cash flow and in their revenues or costs. I'll skip through this slide. I took some ideas from a recent project we did to redefine the value proposition of some SMEs. You'll have the presentation on the website put there. So I encourage you to read some of the, let's say, desires and switching triggers for SMEs. But I'll close the presentation with a couple of ideas. So who does it well? Who does really good, well, amazing SME lending experience, not only in Romania, everywhere in the world? And you actually, if you go around the world, you'll find quite a few examples, obviously from the world of digital banks, neobanks, fintechs. You also have actually a couple of traditional banks over there, even from Europe, who do it very well from other markets. I'll let you look a little bit through the names. Many of them will look familiar to you, I'm sure. You'll recognize them. Plenty of good examples there. If you look at those names, whatever geography out there, if we look at them, what they offer and why they offer it so well, and they have so success in SME, so good success in SME, it's 4 patterns actually. First, they may have, and they have, usually a killer offer or a hero functionality, yeah? One feature that differentiates them, that they do very well. That's usually in lending. Sometimes it's also things around payments or cash flow analytics, but usually it's in payments. I'll give you an example immediately. There's another pattern of more niche offering, again, still in the lending area, things like crowdfunding, like invoice financing, like buy now, pay later products, which also appear in Romania, in SMEs. Yeah, I know in retail that they're existing, and we will have a panel later. But also in SMEs alike, you can have very good offering there. And then there's non-banking products and services, integrations with other types of services that SMEs need to, again, manage, protect, grow their business. And there's a couple of isolated but extremely amazing examples of financial institutions or neobanks or digital banks that actually went ahead to become an actual Amazon, an actual marketplace for those businesses and offering basically everything the business needs. As an example, IOCA from UK. It's a great example if you think about it from a couple of points of view. So they thought, okay, we can offer lending to consumers and we need to do it fast. And by the way, they do it very fast. Like the record is 2 minutes and 30 seconds, 2 minutes and a half. You apply as an SME and in 2 minutes, 30 seconds later, you get approved and then a couple of minutes later, cash in the account. That's pure record. But they do something else, a couple of other things very good. So for example, they thought, look, the SME, sometimes they get stuck with money, right? So we need to offer flexibility. So they linked the repayment schedule and level to the revenue. So they do what is called revenue-based lending or revenue-based repayment of the loan. Or even more, important or amazing than that is they thought, why do SMEs need money at the end of the day? They don't need money just because they need money. They need money to, for example, pay a supplier on time, yeah? Or they need money to be able to tap on an opportunity and sell more. Or they may need to work out with their client to sell more to them when the client doesn't have money. So they thought, okay, so the lending actually is not borrowing the money. It can be actually a payment method between me as a client and me as a supplier and my clients. So they put up the functionality, I call it democratized, or however we call it, buy now, pay later. So every SME can offer the possibility to its clients to buy now, pay later, that invoice when you issue it, in installments through IOCA. So this is the type of, let's say, an example of killer offering or innovation, really thinking about what do the SMEs really need the money for to be able to do lending and increase access to finance very well. I want to leave you with, and this is the last page, I want to leave you with, in the end, a few ideas. I'm not going to actually go through digital automatic. I think that's already commodity. So what do you have to do to be good at micros, SMEs, lending? Yes, obviously, digitalize and make it automatic. But beyond that, there's two points that I want to leave you with. The last one we actually discussed earlier, you have to focus and go where the customer need is. So they don't need just money. They need to buy something or pay something on time or take advantage of an opportunity. And for the last minute, and that's fun, yes, a very important element which actually separates profitable neobanks and digital banks from non-profitable neobanks, it's cost and credit risk management. And in today's world, like the gentleman in the morning said, you have a lot of data, yeah? And even if it's just not big data, but just the good data, it's still a lot. And then for that, the traditional way of analyzing the company from a credit risk assessment perspective and credit risk models doesn't work anymore. And you need more advanced models. And there's good data out there in terms of behavior, in terms of digital footprint, psychometrics, things that you can learn about the SMEs in different ways, in automatic ways. But for that, you need also to advance the risk assessment and the risk models behind. Thank you.